Ladies and gentlemen, long time no see. Before we go into why we have not been here in a while, first let's answer a few questions. Um, so we are thinking 90 days from OS. Also, thoughts on Phase 6. I'm not sure what Phase 6 is. Justin, do you?
Oh, that's Wyckoff, right? Jonathan, Phase 6 Wyckoff. Market mechanics question, not my bag, don't know. Maybe, who knows?
How are we doing? We're actually doing great. We've been really busy. I was down in Colombia. Then me and Justin were at the Rick Rule conference. We'll go into that in a little bit. It's good to be back, but boy, oh boy, I'm tired. This is Joshua. How's it going? What a name. What rate do you think the Fed will get to before they crash the market? I'll actually share my screen here and kind of let's go over a little chart. This is the federal funds rate, and everyone said this, that we've been in a like 30-40 year downturn of rate hikes. But what's happened every single time? So we started in the 80s where we raised rates all the way up to past 15%, which is just astronomical. Then we go forward to 1985 and we only get to 11%. And then 1989 we get to just under 10%. And then we get to 1995 and we get just to 6%. I think we can see where the trend is going. Every single time the Fed has raised rates since 1980, they have not been able to get above and maintain a higher high in interest rates. The reason for that is because the debt continues to build much higher as we go on. I mean, right now the debt now compared to it was when Volcker was raising rates in the 80s is just astronomically higher. That is preventing it for the government, for private debt, for the individual and business consumer to maintain a higher interest rate and therefore kind of circle through this situation. So I mean, we're already getting to the 2018 high. I'm not sure if this is updated to the previous rate hike. I don't think it is. And that is, I mean, there's a decent chance, I mean, the market's pricing in that rate cuts are actually going to start in between December and February of and just in a few months. So if that's what the market's pricing in, that something's going to break and the Fed's going to have to reverse course, that's probably signifying that something's going to break in between that time, and that would be like a liquidity type event. So personally, how am I playing it? I'm not really doing anything with the market as a whole. After we were up a few hundred points, I did buy some puts just because I saw that Justin didn't, and I thought there was some time for an opportunity. I'm probably going to close these going into this next week anyway, just because there's a decent chance that the market rallies. There was a massive new inflation relief spending bill, like $300 billion that just got introduced. I don't know. I personally don't think it will get passed, but just that they're still introducing $350 billion to help tame inflation, when if you give everyone $1 million, I mean, what do you think what do you think is going to happen to consumer prices? They're only going to go up. So that could definitely drive some fuel in the market. The market's also starting to price in that rate cut could start to come. So I would not be surprised if we see a bit of a relief rally, but I don't think that changes anything. I think the Fed is going to tighten until they break something. They've made it extraordinarily clear that they want to tame inflation, and we have not seen that. We still see consumer prices, especially inside the CPI, what the Fed is actually looking at, food, energy, housing, maintain extremely elevated. So if you think the Fed's going to look at the asset prices start to climb for the next few months and say, oh no, we're not going to raise rates, even though inflation's rising, this is okay. I think that you're really smoking on some ganja, because I don't think the Fed cares about asset markets as of right now. They care about liquidity, and we have plenty of it. So I do not think that there's a chance that the Fed's just going to ease off without anything happening to inflation.
Yeah, Josh. So I've got some of the things. So if you pull back up, or if you remember looking at that graph, one of the things that you note is that you have lower and lower highs. So basically, one argument is that, okay, well, the Fed can't raise rates, or the Fed's been constrained and has been constrained in being able to raise rates. The other thing is, if anyone pays attention to Snyder, when his work that he does, is that he constantly has been promoting the idea, which is probably correct, that there is some utility for treasuries above and beyond just holding the treasuries. The reason I mention that in regards to this is that if there's some reason for an institution or institutional players to own treasuries, it props up their balance sheets, they can rehypothecate them, whatever, right? Just again, this falls into that black box of market mechanics. That would put pressure in terms of people wanting to buy treasuries. And excuse me, so this would create a huge demand for treasuries that aren't necessarily related to treasuries. People just need a treasury to put on their balance sheet as collateral. At the same time, if you have rates going up, then you might have more and more people going in to buy treasuries, especially if it's just simple retail going in to buy treasuries because they see rates are going up. This puts in a squeeze for treasuries because if the amount of treasuries they're making right now are barely enough to satisfy the demand for financial engineering, hypothetically, and if retail comes in and starts buying up treasuries because they want a place to park money, because if a treasury is now going to be yielding more or whatever, right? This actually puts a constraint on this puts demand on a supply of things that are already constrained. I don't know how that would map out, but again, I would say I approach this from the perspective of you have a collateral problem and treasuries.
Well, we can see this collateral problem, like quite literally. If you look at repo fails, I mean, they're at the point where they were back in the peak of the COVID meltdown. And if you think the financial stability was okay during that time, I mean, like we saw a 30% crash in a month. I mean, that is just absolutely unheard of. We start to see this again with super short duration T-bills being severely under RRP. That is supposed to be the floor on the complete collateral market, but we're seeing that the demand completely outweighs that. We see that people need collateral right now and they are not getting it.
Yeah, so there's two reasons. Like when people talk about RRP, like I think there is something to the RRP story, but I do not think it is nearly anywhere to the extent that Superstonk and other people make it out to be. But number one, if you are going, if you're not using RRP and going to the open market and basically getting less on your money than you realize would if you could use RRP, either you can't use RRP, either you are prevented from using RRP because you're not a approved participant to use RRP, or there's something about the RRP collateral, maybe that you can't rehypothecate it, that makes it onerous to hold as opposed to buying something on the open market, even if you have to pay more on the open market for it.
There was another clip, I mean, my favorite podcast ever, Inside Baseball with Old Chestnut, Morris Sachs, again talking about this collateral. Again, when he doesn't call it rehypothecation because that's kind of what Snyder started to coin and all these new time macro gurus, but he was actually the people doing this in the actual hedge fund world. And he again was talking about an example of when he was going through this. He said one of the big issues during 2008 is that people would post basically U.S. Treasury backed collateral. But what does that mean? It was just sufficient for U.S. Treasuries and it was fine. But he said it could literally be, you could literally put up the collateral on a bus in Japan, like just a random bus that you owned or anything. Like literally it didn't matter what you put up because at the time it had the same value as U.S. Treasury collateral. Like, and then he said, what happened when all that other collateral started to go down in value? People said, you know what, I want my collateral. But then they came to the realization that nobody was holding the collateral that they said that they were holding. And it was just this massive mosh pit of people asking for treasuries and where they said they had, where they did not have. And you can kind of correlate that to GME, where people say they own these GME shares when they really own anything but. And that kind of goes to one of these next questions.
Which is this one right here, Josh.
I'm being very specific, but I will give you some good news. I think I'm moving down to Colombia in the next month, and if I do, I will potentially shave my hair. And I already regret saying that. So that goes to the next question where we said, do you believe we all receive fake dividends? I would say not necessarily. I don't think so. I think what we could have received is real dividends because I think the main reason they're probably going short is through derivative swaps with each other. And I don't think that involves retail too much.
Yeah, so here's one thing. Like, I've done a lot of thinking in terms of like trying to understand, any other share that's not held in direct registration. And so this is the best way I conceptually can think about it. A share is a share is a share is a share. So that's the first thing. Let's everyone get that out of their mind or whatever, right? But then the share becomes, when you hold it in your brokerage, your Fidelity, your Webull, Vanguard, whatever, right? The question becomes, and my terminology might not be correct, but just bear with me because you'll see the thought process. Where's the locate for this? In a simple world, the locate would be back with computers, or it would be back with Seed at the DTCC, whose locate in turn would be with computer shares. So, for example, if you look at your Fidelity share, well, Fidelity, you say I've got 100 shares of GME in my account. prove it. Fidelity says, yep, even though we've given you credit, the reason we can say we've given you credit is we have located those shares because those shares are directly held with the DTCC. So you say, DTCC, where's your locate? Oh, your locate is with Seed & Co. because that actually is the registration of the shares that would be held in computer shares in the street name. So you see this very, very simple process. There are 3 balance sheets involved. There is the issuers, so it would be, that would be computer shares. The second one would be DTC, and the third one would be Fidelity or your brokerage. I guess there's your balance sheet too, but whatever. Right? You have this going all the way to and fro. The problem that I think people aren't necessarily getting is that when you buy a share and it goes into your account, sooner or later, the question is, where's the locate from that? If it was, let's say, Josh selling me a share, the locate for my share that I bought would come from Josh or whatever, right? Duh, makes sense. But then you can also have this perversion of locates across time. So the way you would do that is, let's say you're Citadel or whatever, right? Or you're the designated market maker, Citadel, in this case for GME. Citadel can step in and say, listen, even though we don't have the share yet, we don't have the share yet, we will give the locate. So from Fidelity's perspective, if the DMM Citadel fulfills the buy order for 100 shares, you'll have the 100 shares in your account. That trade will be guaranteed and settled out by whatever, I think NSCC or whatever, right? And ultimately the OCC, and ultimately the Fed, I suppose, if you really want to go that high. But the point is that Citadel might step in and say, okay, listen, we are holding the bag for right now. We're holding the locate. And then in the interim, if Citadel has a buy order that so that was a sell order, that was a buy order, your buy order that they internalized, so they also can match up with a sell order, that's the locate, at which point they stop holding the bag and they give the locate back to whoever sold the stock, and that matches up with you, the buyer. But the key thing is it's across time or whatever, right? So that's the first way to think about it. The second way that this can happen, I think, is if you have, and this is where I think synthetics come in, where you have like an ETF, which is basically acting as a locate, or you have a option market maker acting as a locate. So if somebody goes out and buys a bunch of puts that are in the money on GME or whatever, right? The option market maker says, listen, we need to hedge. We're going to dump, 100,000 shares into the market that we don't have. So basically the option market maker will say, okay, listen, we're selling 100,000 shares. Let's say Josh and I, or Josh buys 100,000 shares. The locate for Josh's shares are coming from the option market maker. And the option market maker in this case hasn't actually gotten any shares. They've just simply said, okay, listen, we'll hold the locate for that. Now, if the puts close in the money, or if, something happens with the price or whatever, right, they might have to go in and they might have to then cover their position, or they might, in the process of opening the put position or the call position, they might have to adjust the shares that they have in order to manage the delta exposure. But this is, I think, the key thing where you get into this idea of synthetics, where you have, I think everything will ultimately reconcile back, but it's the question of who's holding the locate. And the last thing, Josh, and I promise I'll be as brief as I can be on this front. The real question would be, if you could wave a magic wand and take a snapshot in time, and you look at every single individual's brokerage's account, or like a small company or business brokerage account or whatever, right? A non-financial institution's balance sheet, and you were to say, how many shares of GME does the public at whole actually have on their balance sheet? And then you compare that to how many shares are actually held with Seed & Co. I suspect there'll be a discrepancy, and I suspect the discrepancy arises due to institutions that can essentially hold a bag hold or hold a locate across time, or create a locate. Yeah, that's it. Yeah, or holding locate across time.
This would literally happen with the actual Fed before the Fed started QE. I mean, if you wanted to and you were a mega corporation, the Fed would list some bonds that they wanted to buy. You could say, hey, I'll sell you those bonds, put up the sufficient amount of collateral. Then you'd have 30 days to then go find those bonds that you needed. But on the Fed's balance sheet, they are sufficing that they already have those bonds because you promised to sell them that. If you fail, then they have to go buy them from someone else. But that is actually kind of the way that it happened. Again, Inside Basenet with Old Chestnut, the best podcast in the world, completely better than ours.
Yeah, but see, the Fed is, see, this is where RRP comes back into the equation, because the Fed only has, at least time I checked, like 300 million worth of treasuries on their balance sheet, but RRP is at what, 2.3 billion? The Fed is rehypothecating treasuries, but everyone's going to take the Fed's word for it. Like, the Fed could have no treasuries on their balance sheet, but as long as people think that the Fed's going to get the treasuries or will be supplied with the treasuries.
You're only getting those treasuries overnight and then recycles right back in. But they only have like 300 million on their balance sheet or whatever, or 300 billion. I don't know what the number is because these numbers are so astronomically large, but they're lending out well over $1 trillion every single day.
But see, there's the thing, because that means even if companies are going or getting huge.
So technically, let's say the Federal Reserve goes bust, so they get completely terminated. There's then going to be a shit ton of people that are $2 trillion that gave the Fed dollars in exchange for collateral that thinks that they have that collateral when the Fed doesn't actually have that much collateral. Yes, the Fed has a money printer. They do not have a collateral printer. They would need to go to the Treasury, and the Treasury would have to print those T-bills that would then be sent to the counterparty. But what does that transaction actually look like? I mean, everyone just knows that the Fed's not going to go bust, and they're taking their word for it. But what if you were not the Fed and you were doing this on a massive scale with a stock? And what if that stock happened to just skyrocket out of control? So basically, GME situation.
Yeah, and like I'm trying to find this B of A memo. Like I'm just
Here, you look for that.
Yeah.
I'll answer the next question. Afternoon, Phil. Great to see you. You and your wife are starting to look for houses. How bad of timing is it with interest rates skyrocketing? Need a Fed pause? Well, I don't know what market you're in. Where are you? What kind of house are you looking for? And is there free cash flow? Are you looking to live there? Because it doesn't. If you're looking to live at the house, I don't really think it matters too much. Especially interest rates may be rising, but if you look at a long-term chart, they're still historically cheap. If you get a 30-year fixed rate debt, are you planning on renting it out, or do you want to live there? So I mean, it's super dependent per person, but I mean, if I was going to live in a house, I would just kind of see if the numbers work for myself, and that's all I'd really care about. But ideally, yeah, I mean, I think the housing market will probably go down, but if you lock in 30-year fixed rate at 5-6%, that's not too bad at all. Oh, how you doing, all nighter? I'm glad to see you back. His anecdotal story, if you don't know, he was in where do you get all the salmon? Is that Antarctica or something like that? So you were getting the salmon for $1.15, but I saw Costco selling wild sockeye for only $12 per pound, meaning that although we were getting raped again, it was a little less of a raping. So were you buying them for $1.15, or were you selling them for $1.15, or were you catching them? So you were probably selling them for $1.15. That's well, I don't know what the usual numbers on that are. July OPEX, what happened with that? I don't know. I got fried pretty bad. Justin, you did too.
Oh yeah, but yeah. So what I would say is I think it goes back to so July OPEX was probably realized to that week. The real question is what happened to the June OPEX. And if you saw PieFi stream earlier today, he mentioned on Friday too. If Rake Show, so I mean, nobody knows what happens, but the best theory that I've heard so far is that Rake Show going, or excuse me, XRT going onto Rake Show right on the date. Was it the day that OPEX happened? Or by changing, by letting XRT go into Rake Show, there was a regulatory change that otherwise allowed Rake Show, or that otherwise allowed XRT to kick the can in terms of rebalancing, or not rebalancing, but at least in saying, okay, listen, we've got to go in and buy or settle, these futures contracts in order to get shares of GME. Now, how long that can go on for, that I don't know. But think back to what I said earlier, or whatever, right? When you take these locates across time, you can do that to an extent, but to do that, you expand balance sheets. And when you expand balance sheets, sooner or later, the expansion will not continue, and it will reverse.
Yeah, I don't know what my take is on these OPEX cycles. I don't know if we've been wrong about them forever, if they just completely have stopped working, or if they're starting to eat these obligations and pushing them further into the future. And what will be the consequences of that, if any? I honestly don't know. Cheaper, expensive GME with the new split? No, I don't know. So yeah, we were selling the Canary for $1.15. That price fluctuates from $1.60 to $1.55 per pound, but never goes up with inflation. That is a bit weird if they're selling it a lot more to the open market. Justin, what else have you been thinking about? It seems like the questions are drying up.
Yeah, so I was actually just trying to figure out this B of A memo. Like
I think someone said that it was fake.
Oh, was it fake? Oh, okay, whatever.
I think that's what someone said.
Well, anyways,
so maybe we go into the weekend, like Rick Rule's event. What did you think of that?
Oh yeah. So this past week, Rick Rule, who's a big name in I guess the commodities business, had his like a symposium or whatever. Right. It's really cool because if you ever want to get plugged in and meet the miners, particularly the junior miners, it's a useful thing. And the reason one would want to do that is that if one wanted to make a commodity play, or said if one wants to go into commodities, particularly with precious metals or copper or uranium would be another two exceptions for that. If you go on junior miners, these are they're very, very speculative. They're not like, well, I guess they are penny stocks in a sense, and it's a very risky world to venture into. But like if you can stand on the shoulders of others who've done the due diligence and done the vetting, which is what Rick Rule essentially has done at this type of a thing, it's pretty cool to get some picks. The way I use it is that I go in and like the CEOs or like, upper management will be here from these companies. You talk to them, you see what their deal is, and you say, okay, well, listen, this sounds interesting. Fine, I'll invest $1,000, or whatever, right, into it. So typically in the mining business, the way it works out is you have the big guys like the Barracks, the Newmonts, big miners or whatever, right, who have the capital, the expertise. Like their specialty is like building mines, operating mines, refining stuff, putting stuff to market. They're not necessarily on the G&G side, the exploration, geophysics of the stuff. These are where the junior miners come in. So the junior miners will go in, and these are like the old speculators, the old prospectors. They'll go out, they'll do the samples to say, okay, listen, we've got a great mine, or we've got a great field that we can mine. We've proven it. Here are the core samples, and then they hope to sell that off to a large miner, and that basically generates an incredibly profitable event for those who've invested in the company, or that is the junior miner going forward. There's other places too, like you could do royalty companies as well. And the reason I'm particularly interested in this is that I think that there's going to be a huge hopefully when GME and actually Bobby's the other one. We need to talk about Bobby too. If there's some event where, you have the meme stocks that run away, sooner or later, people are going to say, okay, well, listen, we need to reallocate some of, the portfolio away from the meme stocks into something else. For me, that something else is commodity. Well, I really want it to be real estate, but before I can get there, I think the first step is going to be commodities. And while I do have some physical metal holdings, I'm also very curious to understand how I can get leverage on that. And that's, looking at the miners. Josh and I have talked about Leaps on First Majestic, which is a silver company.
Which was really cool. Speaking of First Majestic, I mean, Keith Neumeyer was there, the CEO of First Majestic. And I mean, having a sit down conversation with the CEO of a company that you have a massive percentage of your portfolio stake in their company, it's very good to see. There's also a few uranium companies whose CEOs were there who I have a massive stake in, who I've met, and I kind of get more of a feel for their ambition and kind of seeing, and I think that's very valuable, as well as meeting kind of the attendees there. It's an older crowd, which I like to see. I like to see that there's not too many people interested in commodities right now, especially uranium, silver, copper. I mean, some of the gold miners, I mean, a lot of these things are just left for the dead. Doesn't mean I'm technically buying right now, but they're starting to look extraordinarily interesting. I've already bought a ton, but I promise you, I will be loading up the boat when we get, let's say, a few months down the line, if they just keep on tanking. So that kind of goes into Craig's question. What's my thought on the precious metals? The metals itself, like silver and gold, you buy gold to stay rich, not to get rich. You just maintain your purchasing power. I think Justin puts it better than anyone. That's just a financial checkpoint. You want to lock in some gains, you buy precious metals, but you don't actually buy them to get rich. And I'm not rich, so what do? I speculate in the gold, silver, uranium, precious metal miners that have a ton of leverage on the actual metal itself. So that's the way that I like to play it.
Yeah. And last thing I'll say too is that, like, talking, so whenever you go to, so the next conference I'm going to be at, and Josh, I don't know if you're going to be here or not, is in New Orleans in
I'll be there. Yeah.
Okay.
I'll be at the New Orleans Investment Conference. Will definitely be the next thing that I'm at. I don't know if I'm going to go to Nomad Capitalist thing in Mexico.
Okay. Well, anyway, so but that's another one. Like it legitimately, like, if you're trying to, like, if you like what Girk does and what goes on in the Discord, where people talking about pickles picks or whatever, right? Like, if you want to expand and do your own due diligence into, like, the commodities or into the precious metals, particularly the mining sector, these two things, I think, or the New Orleans Investment Conference and Rick Rule's thing, and there's a few others, but these are excellent ways to go out and just kind of, start dipping a toe in the water and seeing what's going on. But
it's for someone younger. Like, let's say you're someone like myself who's young. You go there and you meet people, and I'm sure that you could find someone that could potentially, like, that you could find someone to work for or take you under their wing that you can get a lot of information from. That's where I've met every single connection I've ever had, Justin included. And I mean, that's just how you kind of do it. And people want to help the young. It's just an absolute fact that they want to pass off their wisdom to the younger generations, especially if you're a motivated young fella.
Plus, it's fun to troll the boomers. There's so many boomers that show up. Not that there's anything wrong with these boomers. Like, these boomers are typically okay. But Danielle DiMartino Booth, who I like to call DDMB, was giving a speech. He's like, blah, blah. I mean, it's not that she was wrong. She's like, oh, yeah, like, what do you think is going to happen when the millennials have to start paying for Social Security? I'm like, and then I talked to her afterwards. I'm like, so, number one, we both agree the millennials have a problem getting out of bed before 11 because everyone loves to shit on the millennials, just to be, and I'm not saying the millennials don't deserve to be shit on, but whatever, there's the case. Do you think the millennials are actually going to put up with this bullshit? But who do you think runs the government right now, was the response. To which you would say is, well, I guess the boomers currently run the government, but the boomers only have one thing left to do from a generational perspective, and that's die. And apparently saying that in front of a bunch of boomers was really not a good way to endear myself to a bunch of boomers. But
yeah. Justin is very
hurts.
quick at becoming the most hated kid at school. Next
I mean,
question.
it's working.
Yeah, Ethan, can the Fed really trim $1 trillion balance sheet? Answer no. Within the year, as part of their QT program, it's not going to happen. Like technically, let's say they did sell off $1 trillion worth of treasuries. It's just not going to happen. That they feasibly will not be able to. And
but yeah, and go back to what Wang says. It's not so much selling off treasuries; it's just letting treasuries expire, right? Because I mean, isn't that how they're playing it?
Yeah. They're not gonna roll them. But even that, I mean, it's just if they're not. I don't think they have to buy. But with the current way the market is working right now, they cannot sell their actual treasuries. It's just going to cause mayhem. And not even because they're selling, it's the psychology that they're selling that is going to cause like a just massive fragility. I don't even think it would be shown in the bond market. Well, at least not in the treasury market, but in the other credit sectors. And it when you tamper with a market as big as the U.S. government's treasury system, you can't think that there'll be zero correlation to any possible future implications. And oh shit, someone's ringing my doorbell. Justin, you keep talking.
Okay, gotcha. Let's see. Yeah, so I was reading into that. Like the take that I had on it is that it looked like it was it looked like it was regulatory. Is what it looked like an honest mistake that happened. I don't know if that is the case or not, but I didn't get the vibe that it was.
Are you there?
Yeah, sorry, just one second. Now I'm connecting up.
All right, well, I'll talk because I don't think you are.
I'll just deal with that later. I'm sorry. Everything comes at once.
Here.
Bobby options, yeah. No, it's funny because Girk mentioned today on the stream too that Bobby was becoming more and more liquid. I guess one of the dangers, as I poorly understand it, is that the more and more something stays cheap, the more and more retail starts buying. So retail starts buying up shares. You buy up shares. You take shares out, or you take liquidity out of the system, and then all of a sudden, with low liquidity, that means when you get these volumetric, or we have a large amount of volume that comes in one way or the other, particularly on the buy side, it really sends it up, or the price becomes much more sensitive.
Yeah, we were kind of just touching on commodities. Is the bull market for wheat over? I don't follow wheat too closely for like to know. I don't know what's happening, but if it's pulling back, that's good. I'd love to see all commodities pull back severely. I mean, the main commodities on my list to buying, first, uranium. I would not be surprised with every single dollar that I get. I would not be surprised if I start putting 10 cents into just uranium. I mean, I'm so wildly bullish on uranium. It is not even funny. I could see myself selling an organ or two. The next on my list would probably be silver miners, blue chips like First Majestic, just because there's so little of them. Third would be copper miners. Fourth would be gold miners. And those are kind of my top 4 commodities. I like coal too, but it's ran so much. I already hold so much of it, so it's just kind of a no-brainer.
Yeah, and also the thing as far as wheat goes, like if you read like all this stuff, we have food plants that keep seeming, or I guess I haven't read about any recently, but food processing plants kept seeming to explode. So there's that kind of thing going on, and the WEF and they'll keep talking about wanting to reduce the population, all that jazz. So I think we're probably going to be in for a nasty winter, but that would probably bode well.
Justin, I know you own quite a bit of platinum. Platinum's at its lows compared to gold. What are your thoughts on platinum taking physical possession?
Oh, I would say I'll always take physical possession, or your base level foundation that you start on is the physical metal that you have in your possession, or that you use with a trusted third party for that. Platinum's interesting right now because I think when you look at the platinum gold ratio, it's not necessarily as egregious as the silver gold ratio, but it's still it's still notable out there. Platinum is what, maybe 950, mid 900s. Gold's what, 1740. There was a bit of a pop I think this past week. So the point is like historically this doesn't make a lot of sense. But then again, if I was just getting started, I would beef up my silver, then I would beef up a little bit gold, and then I would start going into platinum. I always joke like platinum is the XRP of the metals, like it's the dark horse. Nobody quite knows what's going on, but like there's just a lot of stuff that swirls around platinum. My take.
Uh, what else? What else is going on in your life? I'm finishing up my last Doug Casey novel, Assassin.
Yeah.
Absolutely a fantastic book. I recommend the series to everybody. It's kind of like an Atlas Shrugged type of series, just more enjoyable for young men, just because it's easy to relate to the main character. I'm also listening to a few audiobooks. Reading Plato's Republic, but other than that, I have quite a few things on my mind regard to business, and that's about it. Justin, what have you been thinking through? I know you've been fasting ridiculous amounts. I mean,
Oh,
on 4 days, off a day, on 4 days, off a day, on 3 days. I know that you're up to like 24 hours no water right now.
yeah.
Like,
So
you're just an absolute fucking psychopath right now.
yeah, no. Like I said, next week you see me. I'm still alive or whatever. So here's where this all gets started. Whatever. There's another friend that I have, and there's a bit of a friendly competition that's currently being engaged right now, and so it's kind of seeing who can last longer to an extent. And so I think if I can basically do if I can pull off a 7-day dry fast, I would be particularly proud of myself, and I would have quite a lot of bragging rights, which is really what you want at the end of the day for that. But yeah. It's actually not that hard. I mean, like it's hard to get in it, but once you get into it, like you just kind of get used to it. I will say too, like if you ever want to fix or when a company starts not necessarily going bankrupt, but starts getting into choppy waters, they immediately kind of pull back and they do a rank and yank. They fire all the worthless people that should have been fired a long time ago, and they clean house to become lean and mean. Fasting, I think, does the same thing to your body. If you want to know more, there's a look up like autophagy, which is the concept of your body basically getting rid of marginal cells and kind of going through and dealing with it. The one thing I really wanted to do too, and I don't even know the answer to this, is that, but when Jesus fasted for 40 days and 40 nights with no food or no water, he got the devil to show up. So I've always kind of wondered in the back of my head, if one would do the similar thing, would you be able to grab a lunch on a fast, which would of course be the height of irony with whatever the devil calls himself nowadays. I lose track.
I don't think you can go 40 days dry. I see Phil saying that your organs will shut down after 7-day dry fast. That is simply not true. A lot of people have done them before. What are your thoughts on that?
So like in my case, like I'm like 240 or so, I've got a little extra meat on the bone for that. But if you were coming in like like at 10% body fat, yeah, that would be pretty bad.
Jonathan, I have read Flash Boys. Michael Lewis is okay. I preferred to get into more. It's a pretty good book. Pretty good book. Shit.
Nobody said. Oh, sorry.
What?
Oh yeah. So Embry bought them. Yeah. So like these, when I see that, like the way I see it is like there's a phrase that I really like because it helps keep me on. Like this is the antidote to Super Stonk always crying about crime. Never attribute to malice that which you can explain through stupidity. Now, I think you can certainly attribute a lot of malice to, the Citadels and the other people out there. But in this case, if you have a bank that just miscodes something and then they have to go back and then they have to redo it, like mistakes happen. This feels more like a mistake to me than that. But again, that's just my first blush, based upon the little that I know. That's kind of my take on that front.
European broker sold everybody's position in GME and rebought 4 extra shares without the holder's permission. Sketchy. It does seem like the problem always occurs with these same children.
Yeah. And what I would say, yeah, and sketchy. See, here's the thing, right? Suppose you're some like German bank or whatever, right? And you've got this foreign stock or whatever, right? And there's a lot of interest on it, and like it's not necessarily a split; it's a stock dividend. Like if you don't have your IT, I'm frozen. Whatever. Josh, can you still see me? Hear me?
Yeah.
Oh, whatever. Like if you don't have your IT set up to accommodate this, like sometimes you have to do creative workarounds in order to get it to code correctly for taxes or whatever. That might be part of the case. Again, this is just speculation on my part. So, Josh, let me jump out and jump right back in. I think I'm frozen, right?
Yeah, you are.
Okay, 1 second.
So audio's good. Yeah, it seems like everybody's starting to cut out. Just is what the internet wants. It seems like we're probably going to end pretty soon anyway. Thanks for hanging out, everybody. What are you guys reading right now? Anything? I'm trying to read more, at least every single day. LOL, can we please put OPEX options shilling to sleep? Please just DRS, do what you can with Jamie, pull a stock. I disagree wildly with this, just because I think that you have a fundamental misunderstanding of how the stock is being shorted and what would actually help. And like, if you could walk me through the plumbing of how DRS is actually going to cause MOAS, I'd love to understand it. But if you actually want MOAS, options are really the only way to do it, unless, of course, the short interest is far beyond through these derivative swaps, which we've talked about before. And I'm only trying to make money. That's strictly my only goal. I don't care about the greater good when it comes to GME. I mean, yes, it's great. I hate fraud, but if these OPEC cycles are going to be a way to fund and make a lot of money, I'm going to do them. And we're just telling people what we're doing and why we're doing it. So just don't listen to us if you think we are shilling, because it's probably for the best anyway, as we are two retards. Ooh, don't tell Justin this. Actually, I might even delete your comment, All Nighter, because before he gets back, he absolutely loves Layered Money and Storm Before the Calm. You're reading Option Strategies book. How is it? I just kind of learned all options from YouTube. I have not yet read any books on it. So Justin's device is not connecting. So we'll leave it at that. We are shills, because I don't want Justin to see All Nighters comment and go on a 45-minute rant. All the people shilling DRS nonstop are either too dumb to understand how options work, too lazy to learn them, or too broke to play them. No options, no MOAS, so simple. Subway, I wouldn't go that far, but yeah, like I pretty much agree with you. It's just, how did the first squeeze start? It was through option FOMO, and then how did the first end stop? I mean, how did the first squeeze stop? It stopped because all option FOMO died, and that was and no one was exercising their calls. The only real way to force deliveries is through options, and it sucks, but that's kind of the way it works. All right, guys. All right, All Nighter. It's nice to see you back. We are shills, Joshua. We are. It's just 50 million silver buys last week. Great. All right, I need to end the stream before Justin kills me. Thank you, guys. Oh, wait. What are you reading? Trading for a Living by Dr. Elgar. Great book. Actually, I've not read that. I will write it down. I love those kind of trading books. I like to read kind of personal stories and then relate those personal stories to how I can trade in the future. Thank you, guys, and we'll see you in the next one.